Ladies and gentlemen, welcome. Peter Oloch is my name. I'm a stock market investor and researcher. And what I do is very simple. My work in this channel is to teach about the stock market. I share insights about the stock market. And I guide people on the stock market. On this channel, I rarely do stock market recommendations. So if you want me to tell you which stock to buy today, which stock to buy this week, which stock to buy this month, a stock that will help you make 10% return in 30 days, join my Telegram channel. That is where I discuss the stock market 24/7. 24/7. We talk about the stock market, I give recommendations, I give tips on stocks to buy, stocks to avoid, stocks to sell, and things like that. Join the Telegram channel, the link is below in the description. And if you are new to this channel, I have a request, please subscribe and click the bell notifications so that you get notified as frequently as I upload videos. Currently I'm uploading videos once a week, but in the coming days I'll be uploading videos daily. Today's topic is this: should you diversify or should you not? Does it help to diversify your investments? I'll be reading a lot and sharing with you from several experts in the field. I'll be referring to the Investment Bible by Lynn O'Shaughnessy. Investment Bible. Is diversification good for you? Some people say, oh, don't diversify. Some people say it's good to diversify. But let me say this. Lynn says we should diversify. And when diversifying, this is what you should do. This is what she says. Over the years, studies have documented that portfolio mix of stocks, bonds, and cash is far more important to financial success than decisions about which individual stocks and bonds to buy. Such things as market timing, the securities investors select, and even dumb luck have less of an impact than many folks think, or many people think. In diversifying your portfolio, you need large cap stocks, mid cap stocks, small cap stocks, foreign stocks, bonds, and cash. Basically, you need to have more expensive stocks and averagely expensive stocks and least expensive stocks in your portfolio. I agree, but more so, I also disagree with a few things. Personally, I'm in stock market 100%. I don't do bonds for the simple reason I believe bonds is a waste of my time. Bonds will give me a return of 6%, 12% return per year. I believe that I can make 100% return in the stock market. If I give my money to bonds basically is loaning the government, giving your money to the government, or giving money to corporates. There are corporates that come to the stock market and they want money, so we lend money to them so that they can do business, they can expand their operations and things like that. They give a return of about 12%. Personally, if I decide to give my money and buy bonds, I put in $1 million to buy bonds. The money will take 6 years to double to 2 million using the rule of 72. I don't have the luxury of time. I want my 1 million to be 2 million by December. So what do? Every month, I buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, and make 10% return per year, a month. My aim is per year, I make 100% return. So this issue of buying bonds for me is no. But well, it's good to keep cash. So again, buy large cap stocks, mid cap stocks, small cap stocks, foreign stocks. If you can afford to play in the American market, and by the way, we shall be going to American market soon. We shall be buying Facebook, we shall be buying Google, we shall be buying Amazon, Microsoft, Adidas, all these companies, Tesla, we shall be buying those things. But first, we need to grow our capital to reach $10,000 or $1 million. That's what I want everybody to do. Everybody must save 10,000 shillings per month, times 12 months, times 5 years, and become a millionaire. All of us must be millionaires. Then we can go to the American market. But one of the things Lynn Shugnessy says that you also need to keep cash. Cash is very important. You need to keep cash for emergencies. Things happen. People get sick. You can fall by the roadside. You can be knocked by a vehicle. Anything can happen. Your child can fall, children fight, they do all manner of things, and you always need cash. So things can happen and you go to the hospital and the hospital tells you, no, we don't cover this condition. And you have insurance, health insurance, and the hospital outrightly tells you, no, we don't cover that one. So what happens? You have to dig deeper into your pocket to pay for some of these services. Ladies and gentlemen, it is good to have emergency cash. I repeat, have stock, have bonds, have cash. But personally, I'm just doing two, stocks and cash. Bye-bye. Please subscribe. Please share this video with your friends. Tuonane kesho. God bless you.